Hey, everybody. It is Thursday. It is sunny. It is beautiful. I am so happy. And it is episode 91 of the Real Deal Pod with Alistair and Jeff. Yes, it is me, your trusted realtor, Alistair Carrington, alongside our trusted mortgage broker, our mortgage guru, Jeff Lee. Oh yeah, baby, the sun is out, the sun is shining. Jeff, buddy, you're looking well and chipper. How you doing?
Yeah, I'm doing good. Doing good. Like you said, it's nice weather. Not raining. Spring is coming. And
Well, spring was here yesterday, wasn't? Wait, when was the first day of spring? Maybe it was a couple days ago.
I don't know.
I think we just passed it though.
I'm sure. I have no idea.
What I do know, sorry, Jeff, is we are almost halfway through spring break.
Well, yeah, you know that because you got kids probably that are sleeping in until 2 and going to bed at they're doing the 2 and 2. Go to bed at
Yeah,
2, get up at 2.
about that. Actually, my daughter's boyfriend is over right now, and they just went out to go walk the streets, the little hooligans.
But he didn't sleep over, I hope.
No, are you crazy?
Hey,
No, man.
I had to clarify because I'm sure there's people out there who's like, whoa, Alistair.
Hey, listen, I know there may be families that are cooler than I am, but I don't roll that way. That ain't happening. Wait, Jeff, what was your age limit for when your kids could have a sleepover with their girlfriend? Like sleep in the same room even?
Never.
No? I was
You know what? I'll be honest. Yeah, I was never ever a fan of that. I know when I was growing up, I was in grade 10 when that started to happen. Um, I'm not
You
gonna
slept
say
over at a
that.
girl's place in grade 10? Good for you.
Yeah, I'm not going to say that maybe they haven't snuck into someone's room, but yeah, no, for me, that was a hard no. It was like
Yeah.
as long as you are under our roof, there's only one person sleeping in your bed, that's you, and if that other person, that's going to be your mother or it's going to be me, but it's going to be or your brother. It's not going to
Right?
be anybody else.
Yeah. No, that's crazy. Yeah, as younger, no, we didn't have sleepovers at girls' place, man. There was no way. Manitoba, though, we're a religious little province out there. And then, and then, like my parents' rule too was unless we were married, like unless you're married to that person, then you can share a bed under their roof. Otherwise, that wasn't going down.
Yeah. Yeah. And it's different nowadays. I see that with some even on my younger friends. But yeah, I don't know. I think everybody has their own opinion and there's opinion that hey, if it's going to happen, you might as well have it happen in your own house where you can monitor it or so but again, I just never really kind of towed on that line. I was just a little bit more old school, I guess you could say. Um, but again, I think everybody this is where I go with this, and I know this is now going way offline, but anybody, and we said this last week, if you're looking for someone to agree with you and your opinion,
Mhm.
you're always going to find people that will, and you're always going to find people that won't. So again, as it comes down to it, it really comes down to what your family is comfortable with and
Yeah.
what you're okay with. And again, if that's right or if that's wrong, that's a matter of opinion, right? Um, and at the end of the day, it's your house, your rules. So whatever that looks like.
Yeah, it's true, but I don't want to be a grandfather just yet, and I don't want somebody rolling over in bed the wrong way by accident and oops, here comes a baby. So yeah, that's where I'm with my parents. Unless you're married to that person, Uh-uh.
Yeah,
Not under my
yeah,
roof,
I agree.
right?
I
All
agree.
right. Well, hey, man, we got a lot of stuff to get into today, so let's kick it. Let's get it started, as always, with the hottest segment in podcast right now, and that is.
Did
Did
you
you
know?
know?
That's right, baby. Did you know? All right, Jeff. Here's what's going on in Vancouver. There's a 7-story, 123 unit rental project called Vienna House right near Trout Lake.
Okay.
And this isn't your usual mid-rise, Jeff. It's the provincial government's first full prefabrication project of its kind in our beautiful province.
So explain to me and everyone else,
Yep.
what does prefab mean?
Prefab, walls, floors, ceilings, balconies. They were all built, mostly, they were built off-site in a controlled factory in a controlled environment. Then what happened is they're shipped to the site and assembled like giant building blocks.
Yeah.
Yeah,
Yeah. I
yeah,
know. I always will ask these questions because there's times where people will like, oh yeah, prefab, or oh yeah,
cool.
yes, and they're like, I don't even know what does prefab mean. So
No,
so
I know.
that's why I always ask these questions that might be simple to some, but clarity for others.
For others. And I know, and that's it. And we've been talking about it like on prior pods. We've been talking about how that is the push going on now and all of that sort of stuff. And I don't think we've really, stopped and actually outlined just what prefab looked like. But that's what it is everything is created mostly off-site, and then gets put together like Lego
Yeah.
when it gets there. And so here's was an interesting fact. Um, the crew that was putting it together was a novice crew. The first balcony took them 32 minutes to
Oh
do.
wow.
Yeah. By the end, crews were down to 6 minutes each.
Really?
Yeah. Yeah. So Carney was just here taking a look at they walked through the project last month. And so of course now the government sees this and they're like, okay, all right, faster builds, more supply, affordable housing, done. We got it. We're gonna get this done. But interesting thing that came out from the people that have been doing this now, right? The people are saying that it's actually becoming more complicated than that. And because prefab isn't just a faster way to put the buildings together, what it's causing now is a total system shift. Because now suppliers need to be involved before the design phase to make sure all the product right is available, right? And in order to line up production schedules, you have to book factory time earlier, which increases upfront costs now. And you need space near the site in order to store modules before they go up. And right now, our supply chains aren't fully ready to support the prefab at scale, right? So, and also get this, crews on site can actually assemble faster than the factories can produce the modules.
Oh, okay.
Yeah. So the bottleneck now isn't going to be labor anymore. It's going to be manufacturing, coordination, logistics. And if those systems aren't perfectly aligned, prefab can actually slow you down and not speed you up.
Yeah.
So I wanted to kind of ask you, right? What are your thoughts on prefab? Like, because we're talking about how that's going to be a way now to, bring down our affordability and all of that sort of good stuff, right?
Yeah, I think anything that we do new is always going to basically have a hiccup or two until they kind of streamline it. But yeah, prefabs, from my understanding, are much more cost effective than building on site, right?
Yes. Yeah.
But then again, it creates more other issues to your point of transport and manufacturing And again, what is that going to look like even intraprovincially, as far as if they're coming through intraprovincially,
Mhm.
and even though intraprovincial tariffs, like I don't, we're not even getting into that side of the conversation
Sure.
yet.
Yeah.
Um, but yeah, it's like anything that we do is always in theory to improve,
Hmm.
but there's always going to be speed bumps along with it. And again, is it better? We will soon find out.
So that's going to be my only fear, and then we'll get moving on to our next topic. But my fear is if manufacturing and coordination and logistics are off, that's what's going to cause the bottleneck, not
Yeah.
labor. Those are a whole lot bigger things almost than labor. Well, not almost, definitely than labor is. We can find people to do a job, right? We can find people if we really want to do a job. But when logistics and manufacturing and all that stuff is off and that becomes your bottleneck, that creates a whole set of new problems.
Yeah. Well, and again, like, can we find people to do a manual job in
Well,
today's environment, right? Like,
we
so,
we again, it's true. I know. I feel when you have an economy that's robust, an economy that's going, and you are paying people what they deserve to be paid, and not cheating people. I do, yes, I believe that we can that you can find people to do a job. I mean, we were able to do it all the way up until we started making jobs look less desirable and less meaningful. And I think that that's a whole nother pod,
yeah.
right?
Yeah.
But
I just think it adds, it's not that it's labor is going to be easier,
no,
or it's just it creates a different dynamic. And what does that dynamic look like? And again, we can speculate, but until we get there, we don't know,
yeah,
right?
exactly, exactly. But there you have it, the Vienna house, the first. Oh, it's an all rental unit. I don't know if I mentioned that at the beginning, but it's an all rental.
So you said, where did you say it was again?
It's in Vancouver, right by Trout
Trout Lake.
Lake. Yeah.
And where is Trout Lake?
Trout Lake is it's right Trout Community Center. It's in East Van.
Okay.
Yeah, it's in East Van, right by Victoria Drive and East 12th.
And is it in mid construction, full construction, or is it complete?
It looks like it's coming up to completion. He was just Carney was here last month taking a walkthrough of it. So it looks like it's nearing completion.
I'm going to go take a look at it.
Yeah. Yeah. Sounds interesting.
Yeah. Well, let's go. What else have we got on the table here?
Right? Well, that's I don't know. Well, we've got your stuff, and then we can go visit it after.
Sure, we can do it. Well, hey, this is what I want to talk about this week is what kills deals in the last 7 days before closing and
Uh,
how to avoid it. So, Alistair, have you ever had a file
yeah.
where you have a client that's purchasing something and then all of a sudden it falls apart in the last 7 days after it was completed with everything approved? Has that ever
I
happened to you?
No, I can honestly say, I thankfully have not. But that is because I had a mentor of mine kind of, educate me on how to avoid stuff like that, how to address it, even stuff like reminding people, hey, just because you got approved for that mortgage, don't go being buying a car now. um, right before you're finished closing on the house. So yeah, so no, I haven't had one, but it's awful. I hear awful.
In all my years being in the mortgage industry, it has yet to happen to any of our clients that we've
Yeah.
worked with. But to your point, it's also really important to have that foundational knowledge as far as what not to do so it doesn't kill your deal or your purchase 7 days before it closes, right?
Yeah.
So we are going to be your mentor or this pod's mentor and use your example to say, hey, it never has happened to me, because I had a good mentor. So I want to be the mentor to our group. And let's try to avoid that if you guys are in the process of a purchase and not exploding it within the 7 days before it completes. So
Yes.
here's what we need to understand. The last 7 days before your financing or before your purchase completes carries the highest risk.
Mhm.
And a lot of people, what we don't understand is that the deals can still collapse before funding. And these are what people are doing in order for that to happen. Many of us, most of us in your industry and my industry feel that once the subjects are signed and removed, or the conditions are removed on the purchase, once all the conditions are removed on the mortgage and everything is file complete, many of us will believe that, hey, we're good to go and until the completion date, and we just basically move on with our lives and get on to the next thing.
That is one of the biggest misconceptions, right? I think that people don't have and really should be educated with at the beginning of the process, to be honest
Right.
with you. Yeah.
And here is the thing is that what people need to understand that are purchasing homes or getting them in a refinance or whatever that might look like when it comes to financing or purchasing is that lenders can audit the file prior to the financing date or prior to the completion date. And what that can look like is that lenders, they're called a pre-audit before the completion. And they will take a look at employment. They will take a look at the income. They may come back to us on the broker side and say, hey, can you update the letter of employment or can you update the pay stub because your file has been pre-audited and we're just doing our due diligence before we release the money. Lenders quite often will repull the credit, days before the funding just to make sure that all the debts are the same.
Mhm.
And where I'm really going with this is to have people understand that your financing or your purchase isn't complete just because you removed the subjects and everything basically was done at often weeks to months ago, right? Lenders can come back and they can do these pre-audits, which can basically derail that purchase or that financing within the last 7 days of the completion date. So, what are the biggest deal killers, right? And I'm sure this is what your mentor has said to you, Alistair, back in the day, is once you guys are purchasing something, once you guys are doing financing, and again, it could be a refinance, it could be, a transfer or a switch. It's not always a purchase. But once that financing is completed or the conditions have been satisfied, or in terms of a purchase with the conditions being removed, now making it firm and binding, do not change your job.
Yeah, that's a big one. Yeah, that too. That-
And that's a huge one. I'm surprised on how many people, when they're purchasing something or doing financing, all of a sudden are changing their jobs before it closes,
That's the
right?
one he got caught on was the job change.
Oh yeah,
Yeah,
this
was the job
this is your
change.
mentor.
Yeah, he got caught on the job change.
The other thing we don't want to be doing is taking on new debt. Now, I've seen this is when people get approved for a house, the financing is complete, the condition of finance have been met, all the other subjects to the purchase have been removed. Now, all of a sudden, they're going down to Jordan's or the Brick and buying a ton of furniture to furnish their house and basically getting financing on that,
Yeah.
right? Again, you do not want to do that. Do that after your purchase completes. Do that after the financing completes. Another thing that we see is people going on and buying a new vehicle,
Yeah.
right? Buying a boat, um, taking on a new debt, whatever that might be looking like. Any kind of financing that you're doing when you're in the process of getting a mortgage or purchasing a home and you're taking on additional debt before it completes is a huge, huge, huge no. The other thing is moving money around or unexplained deposits. Remember, we are in an environment where the anti-money laundering compliance is very, very heavy. In fact, we're seeing a lot of the new AML, it's called anti-money laundering, AML compliance that's coming within our industry back in 2024, I believe it rolled out, as far as the due diligence that we as mortgage brokers need to do with unexplained deposits or large money shifts. I know that's always been a thing through the real estate side of things with BCFSA and your governing and that governing body. Um, but it's also, again, important to understand that lenders also take a look at that. Um, and if they're seeing a lot of money being moved around or a lot of unexplained deposits, and they come back to you, the borrower, and you're not able to explain that, that is going to be a huge, huge concern where, again, the financing may not complete if there's not reasonable explanation, right?
Yeah. Yeah.
So the other things that can happen is when people are getting pre-audited on their financing is the lender will quite often, as we've been talking about, is repull the credit. Now, if all of a sudden that you may not have incurred more debt, but maybe you've stopped making payments or you become delinquent on some of the stuff that you had at the time of the financing, and then they pull it, and now your credit score drops below what that lender's acceptable credit score needs to be,
Yeah. Yeah.
right?
Yeah.
The other thing too to understand is that the delay or the things can get derailed. Maybe it's not on your side of things. Maybe your debts have stayed the same. Your job has stayed the same. Nothing has changed. You haven't been moving money around or having large unexplained deposits. But maybe your acting solicitor has dropped the ball, right?
Not having the right people a part of your power team.
Right. And some of the things that your acting solicitor may have dropped the ball is don't have the insurance binder in place in time, right? There's missing signatures on solicitor requested documents that the lender needs back. Maybe the solicitor hasn't submitted all the documents to the lender. And again, important to understand, and many of you that are doing financing, there's broker conditions that need to be satisfied. But there's also solicitor conditions that need to be satisfied. And sometimes the solicitor is dropping the ball, right? So again, it's always very, very important to work with a power team. So when you are doing any type of financing, be it purchasing or restructuring, that you do have a great solicitor as part of that power team that's not going to drop the ball, right? Some other things that can happen too is some lenders don't ask for strata documents from the broker. They'll ask them from the solicitor, and now all of a sudden there's strata issues that are coming through the strata documents that haven't been seen for the first time because they're now a solicitor condition versus a broker condition, and that often can basically take financing off of the train tracks,
Can we
right?
just pause something for the strata documents just so I can say when you guys when your realtor receives strata documents, it is on us to read through them and have an understanding and should have an understanding and knowledge of what the strata docs contain and what the information means.
Yeah.
There are a lot that don't though. Let's be honest. There are a lot that don't. So for your own peace of mind, you should always have your lawyer review the strata docs. You're going to need one anyways, right? I mean, I know you can use a notary, but most people have a lawyer, so you're going to have one anyways. Have them read through the strata docs so that you know what's in there, just so that you don't.
Well, and to your point, Alistair, a lot of times your notary or your lawyer, they're getting those strata docs too late, right?
Sure. Yeah.
Really, what this comes down to, and to your point, is your realtor should be reviewing and reading those strata documents and making you aware, the buyer aware of any strata concerns,
Yeah.
as is, again, all lenders. And this is really important to understand because we work with realtors sometimes and we're like, oh, we need the two most current year AGMs. We need the Strata Form B. We need the last 12 months of Strata Council minutes. And you wouldn't believe, Alistair, how many times I've heard, well, this is the first time I've ever been asked of that. My mortgage broker doesn't ask me for that. And I've said, and I jokingly say, well, now you have, like, welcome. Yeah, it's the first time for everything.
Yeah.
But maybe the broker or that financial institution that where you're getting your mortgage, maybe the as part of their lending policy is for it to be a solicitor condition for the solicitor to take a look at that and advise on versus the lender to be looking at that
Mm.
and advising on that. So every lender isn't always asking for strata documents. So again, when I
Mhm.
hear realtors saying, well, this is the first time that I've asked for that, well, maybe you have a referral lending partner that is working with a lender that isn't asking for those strata documents because they're making it a solicitor condition.
Okay.
And again, keep in mind the solicitors really aren't looking at things typically until 1 to 10 business days before the completion date, right?
Yeah.
So if it is a solicitor condition to review the strata documents and your realtor either missed it or isn't reviewing them, and a lot of them do not, to your point,
Yeah.
right? Um, this is again where things can basically fall off the rails.
Mm.
Um, and again, lifestyle changes. All of a sudden, and this goes back to incurring more debt or making big purchases. Again, these are the things that are risky when you are purchasing or doing any type of financing and really starting to do things differently before the financing or that purchase completes, right?
Yeah.
So here's an example. Um, Working on a file. This is not me. Someone is an acquaintance or a work relationship, another broker working on a file. It was a purchase. All the subjects to the purchase get met. All the conditions are all met. So basically, the purchase is complete. It gets all signed off on. The financing is complete. And then all of a sudden, the borrowers go and co-sign a loan for their kids, right? And again, innocently enough, we're just co-signing for our kids. I'm not going to be responsible for the payment. My kids are going to do it. And again, but what you need to understand and what that these people need to understand is that if you co-sign a loan, you are equally responsible for that payment um, if your son or daughter isn't making that payment. So your legal obligation to that debt is no different than the person that you've co-signed for, because if they don't pay for it, they will be coming after the co-signers for it. Now, because it's now a debt, and now it becomes part of your debt servicing, it becomes part of your monthly obligation, your debt obligation. But even though that you have never made a payment or don't plan on making a payment, it still counts as a personal debt. As a result, they do the debt servicing on it. The deal collapses because that person no longer debt services for what they want to borrow.
Yeah. Yeah, and again, I love that as an example because that's another one I think people don't even think about, don't really even understand is that, yeah, I co-signed for a loan, but not a big deal. It doesn't affect me. I mean, they're the ones paying it. But then,
Yeah,
no, you are actually taking on that debt.
yeah,
They don't understand that they're actually taking on that debt. They're not the first payer, right? They're the backup plan,
yeah,
but it's your debt now too.
yeah.
Either way, it's getting paid.
Yeah, and because it's your debt, it becomes of your part of your debt servicing. And
Right.
remember, every $600 payment you have
Yeah.
affects your borrowing power by $100,000,
Yeah.
right?
That's the key thing. The
Right.
100 grand.
And an average car payment is anywhere from $400 to $800,
Right.
right?
Right.
So again, you can imagine these folks where they're like, "Hey, we're buying a house. Everything is good. It's all, bells and, what is that? Rainbows and unicorns." The kids come to him, "Hey, can you co-sign for me?" "Yeah, no problem."
Yeah.
Am I gonna have to pay anything?" "No, no." "Hey, okay, fine." And then all of a sudden, this file gets pre-audited. They pull the bureau. All of a sudden, there's another debt on it that wasn't there before. There's an explanation on it. "Hey, well, yeah, we just co-signed for our kids." But again, Mr. Borrower, this now becomes your debt. And now, because this is a $600 payment, which affects your borrowing power by $100,000, you no longer qualify for the mortgage on the property you want to purchase.
Crazy, man.
So
Crazy.
again, how do you protect yourself? And if anybody can take anything away from this, is if you are in the process of a purchase, if you are in the process of any type of financing where there is a anything involved, do not do anything until after the completion date. Keep everything the same. Make sure that nothing changes, because what can happen is that your lender that has committed to your financing can do a pre-audit. And if they do that pre-audit and they revisit your credit and that's changed, if they revisit your employment and that has changed, if they revisit your bank statements and just taking a look at the activity and there's unexplained activity in there, your financing can collapse. And at the end of the day, these are the things that you want to protect yourself with as you're moving forward with anything that you're doing when it comes to financing or purchasing.
Yeah. Yeah. Amen. Amen. Because that's a question of that's right along with what are the rates, right? Like what that should be like what happens with my what should I know about my mortgage? What should I know when I'm getting one? What should I know? And that's instead of and that's what people need to, I think, get in the habit of framing the question now, as opposed to, what are the rates? It
Yeah.
should be, what should I know about getting a mortgage? That's it. Like what are the important things to know?
Well, and equally to that is most people don't know. And most people will
Yeah.
just ask, "Well, what is the rate?"
Yeah.
You, as part of your power team, have an obligation to our clients
Yeah.
to let them know what they need to do and let them know what not to do.
Yeah.
And this is where I say is that, 25,000 realtors here in the greater Vancouver area. The average realtor last year sold one house. So what that really tells me is that everybody knows a realtor, and most of them, I'm going to say, aren't doing enough business to guide you the right way.
Sure.
It's the same thing with a mortgage broker. There's over 18,000 mortgage brokers here in Canada. Everybody knows a broker, everybody knows a realtor. But I also say 16,000 of those mortgage brokers are not very good. You want to work with the top 5% in the industry, be it on the realtor side, be it on the broker side, be it on the accountant side, be it on the home inspector side, be it on the property management side. These are your power team, right? If you are working with the top 5% in their field, you are going to be well taken care of. And this example of the financing not completing after, 7 days before the completion date is not going to happen because you've been educated along the way as far as what to do and as far as what not to do.
Yeah. Amen, man. Well said. Well said.
All right.
Well, I think we should end it on that note, man, because I think that was strong. I think we ended strong.
We ended strong.
Beautifully. Beautiful. Beautifully. Well,
Beautiful.
beautiful. Wow.
I
I'm
agree.
making up words now, Jeff. I'm making up words. Well, everybody, thank you all for taking the time to listen to us today. Again, Jeff and I, as always, hope that we provided the most amount of value as we could today. Biggest takeaway, listen, man, when you get your mortgage complete, don't go be buying boats and cars and stuff like that. That's the craziest thing that people can do.
Or your purchase.
You take away, don't take away that. Take away that today. Go check out a prefab home. In fact, they're actually doing a few more in Burnaby in the upcoming months. So there's going to be a few more prefabs going on. So we hope you guys have taken away a lot today. We hope you guys have an amazing weekend. It's going to be sunny. Go out and enjoy it. Tomorrow I'm shooting video at my new listing going up. Woo! But most importantly, until next week, stay empowered, stay informed, and Jeff,
stay tuned.
That's right, baby. Stay tuned. Peace out.